Hello everybody, what's going on? So few big insights are coming from NIO's end. Company is playing a high stake game of chess right now, and the market is completely missing the grand strategy unfolding behind the scene. If you have been watching the news talk lately, you know the bears have been screaming about transparency, competition, and delivery numbers. But if I told you that the lack of public data right now isn't a sign of weakness, but a calculated tactical move to catch the shots completely off guard. Let's look at the absolute ground reality of what is happening with NIO's flagship, the ES9. There is a massive piece of leak intelligence making waves across the community, which you can see right here. According to the prominent supply chains and field observers, NIO headquarters is strictly controlling the ES9 order data and explicitly choosing not to share it with individual dealers or public. The data communication channels between cities are being kept on an absolute need to know basis, which restrict limits on the number of people who even have access to the master spreadsheet. Now, why would a company hide a massive success? The whisper coming out of the front line suggests that NEO may have already quietly secured over 10,000 firm orders for the ES9 during its initial launch phase. Think about the strategic brilliance of keeping this under wrap. In a brutal EV price war where the competitors alter their pricing and marketing strategies daily basis on rival order book, NEO is denying them that data. By keeping the explosive demand for the ES9 completely quiet, they prevent rivals from reacting while allowing their production lines to quietly and efficiently ramp up without external speculative pressure. However, the early indicators we do have from specific city level data are staggering. In major metropolitan market, the first full month of the ES9 orders actually reached two-thirds of the total established ES8 order placed in the same time frame. For a brand new vehicle ramping up production, achieving two-thirds of the volume of an established premium flagship is an incredible feat. And according to the frontline staff, the production ramp up is going incredibly smooth, with team confidence at an all time high as they adapt to the market change with massive agility. But a vehicle is only as good as the infrastructure supporting it. And this brings us to the second massive catalyst that the market is aggressively unpricing. Look closely at the update from the CEO William Lee shared on 23rd June 2026. As of late June 2026, NIO has officially crossed the momental threshold of building over 9,000 charging and battery swap stations. Not only that, they have now crossed over 200 million cumulative battery swaps completed. Now, let's contextualize what 9,000 infrastructure stations are actually mean for the bottom line and the long term moat of this company. Wall Street legacy analysts look at the battery swapping purely as a heavy capital expenditure. They see a cost center. What they fail to realize is that this infrastructure represents the ultimate consumer moat in the premium electric vehicle ecosystem. Once a user experiences a 3-minute fully automated battery swap, the legacy charging experience of sitting in parking lot for 45 minutes becomes completely unacceptable. By scaling past 9,000 stations, NEO has effectively built an unsustainable energy network that acts as a recurring revenue machine and a massive driver for vehicle retention. Furthermore, this 9,000 station network isn't just for NEO owners anymore. With the opening of their battery swap standards to major industry peers and the expansion of their sub brand, NIO is transitioning from a simple car manufacturer into decentralized energy grid of the next generation of the transportation. Every single station added increases the density, decreases customer anxiety, and drives down the per unit operational cost of the entire network. When you connect the dots between the hidden blockbuster orders for the ES9 and the unparalleled scaling of the energy infrastructure, the broader financial narrative for new stock completely changes. We are moving away from the narrative of unprofitable startup and entering the era of an industrialized giant that has successfully built its moat and is now quietly scaling its high margin assets. For investors holding the stock or looking at the current valuation, this mismatch between public perception and operational reality is where the greatest risk to reward ratio is born. The market hates a vacuum of information, which is why the stock has experienced volatility due to controlled data strategy on the ES9. But once NIO decided the time is right, lifts the veil, and officially reports these massive delivery milestones alongside their infrastructure dominance, the narrative shift will be violent to the upside. The foundation has been laid, I would say. The infrastructure is unparalleled, and the underlying demand is proving to be incredibly resilient. NEO is positioned for a massive, fundamentally driven breakout from here, I would say. So prepare now. With that said, thank you so much for being here. See you in the next one.